Hello guys and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the NASDAQ100 futures chart. What a trading session we had on Friday. We skyrocketed towards the upside and off the lows that we achieved on Thursday. Let me just see from a percentage perspective. We are currently up 8.73%. So it's been a very, very volatile past couple of days, especially considering it was a shortened trading week, as on Monday, of course, the markets were shut. But this chart looks beautiful at this moment in time. To me, I feel like the bottom is officially in. We've had this ABC correction. Of course, we had those lows on January 24th. And then when we went up towards the B leg and we started to drop again, I said two scenarios could play out. You can even go and watch my videos that I was filming back on Monday and Tuesday, where I said, we could potentially have a W bottom where a chart pattern similar to this, we could have potentially formed that W pattern. Of course, that typically forecasts the end of a correction pattern. Or on the flip side, if we took out January 24th lows, as of course that's exactly what happened, then we would be trading within an ABC correction. And I said it's kind of difficult to understand when it's an ABC correction. It's kind of hard to predict how low it will go, but there's one important rule with regards to the ABC correction, and that is of course that the A leg but the C leg has to be lower than the A leg, and that's exactly what happened. Of course, we took out that 13,700 area, and we did have a low all the way down to 13,030. Some can also argue with a ABC correction that it can actually form the exact same distance as the A leg. That didn't quite happen, as that would have taken us down to around 12,375. Very thankful that didn't occur. But to me, as I just mentioned, this seems to me that this is the end of the ABC correction, and now it's very likely that we will now go and target the top of the B section, which of course is all the way up around 15,200. Those are the monthly highs for February, but it's nearly a new month. It's March. And I think that, sentiment is going to all depend on, of course, the escalation or the de-escalation, hopefully, with regards to the Russian and Ukrainian tensions. But as well as that, on the 16th of March, that's when we have the Fed minutes. And I think 50 basis points is now officially off the table, as Russia have of course invaded Ukraine. I think we're looking more at a 25-point hike, and that of course is very, very bullish for interest rates. If you go back to my videos in January, I said that it's highly unlikely that we're going to see some banks have been calling for 8, but even 6 interest rate hikes this year. And I come out and I said we've still got threat of COVID. We could easily have another variant tomorrow which could completely derail the recovery that's currently occurring around the globe. Like for example, in the UK, there's no masks anymore. The US, there's no masks here in UAE. Dubai just announced for next week that masks will now become optional. But as well as that, of course, we also had the tensions between Russia and Ukraine. And luckily it wasn't, luckily for most of us, it wasn't COVID. It wasn't a new variant of COVID, but unfortunately for the citizens of Ukraine and Russia, the tensions have, of course, escalated. So really, really bad news. And of course, I want to, show my biggest sympathy to all of the citizens and families in Ukraine at this moment in time. If we do have any Ukrainian viewers, I really do hope that you are safe and well. Likewise for your family members, and of course, even if you are Russian, I hope if you had anyone who's fighting in this war, I just hope that they are safe, and I really hope that there will be a ceasefire or some talks will escalate between Ukraine and Russia, or between the Western countries and Russia, and this war can just stop as soon as possible. But I did also mention that the markets have priced in a lot of negativity over the past couple of trading sessions, and that leaves a lot of room for a upside gain. And I think, why did the markets rise on Thursday and Friday? Typically speaking, I've actually looked at the 5 past, the 5 most recent wars. So we've had the Gulf War, we've had the Iraq invasion, Afghanistan invasion, and historically speaking, the last 5 wars, so the last 5 out of 5 wars, on the day of the invasion typically marks the bottom of the stock market. So it's kind of, the old saying in Wall Street where you buy the rumor, sell the news. Well, of course, it's vice versa. So let's flip that around. It's kind of sell the rumor and buy the news. So, of course, there was a rumor that Russia could potentially invade in Ukraine, and that's when we had this phase here in the markets where the NASDAQ has fallen from 15,000 all the way to all the way down to 13,000. So we had a 2,000 point drop. And then on the day of the invasion, which of course was on Thursday, the markets have actually bounced rather nicely. And then yesterday we had some gains. This could just be short covering. This could be a lot of investors who don't want to go short into the weekend, because if there is an announcement of any ceasefire, etc., then you can expect to see the NASDAQ 100 gap towards the upside. So this could just potentially be short covering, but I do like this move, and I think that now we go up towards 14,500. That's the next fib level, the 0.38. I think we've locked in these key fib levels, and as well as that, of course, we have the next one all the way up at 15, well, just shy of 15,000. But I also did mention earlier on this week that, you know, when we have that 50-day EMA moving below the 200, it historically for the indices and the indices only marks a fantastic opportunity to buy, not to sell. Where with other assets, it predicts a medium to long term bear market, or bearish trend, I should say. So now we've had that. You know, is that fantastic buying signal? So I'm going to go out. Of course, I don't have a crystal ball. I can't predict where the markets are going to be exactly in the short-term future. But I am going to come out and use YouTube as a platform to say that I personally, I personally think that this is now the bottom for the NASDAQ 100 down at 13,050. We've never actually had a daily close in bear market territory. If I go from the highs, that close, we would, that was the lowest close, down 19.29%. So we actually haven't had a close in a bear market territory, and I think at this moment in time, this offers a fantastic buying opportunity. Still expect volatility. You know, we're still going to have some wild swings, but also one other positive sign is that the VIX fell from 37 all the way down to below 30 on Friday. That is a very encouraging sign that the markets have indeed bottom. So I'm bullish here for the NASDAQ 100. I think this is a perfect time to buy. I think you can target up towards a 15-200 day EMA. Of course, you can expect to see some resistance at those levels there, but ultimately we break above and we go trading up towards the all-time highs. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.